Hi guys, we're going to talk about mutual funds today. So I have here Jackson Square, T. Rowe Price, Chip Growth, Matthews Asia, Matthews China, BlackRock Health, and T. Rowe Price Health. So we have two domestic, we have two foreign, and we have two sector funds. So looking a little bit closer into the management of these, you can see that there's two managers for Jackson Square, one for T. Rowe, there's two for Matthews Asia, two for Matthews China, one for BlackRock Health, and one for T. Rowe Price. So nothing really crazy standing out there with the number of managers. If we look a little bit into the actual people who are managing it, you can see that they are certified. Many of them have multiple degrees. If you look in these specifically for the foreign funds, you'll see that a lot of them are bilingual, multilingual, trilingual. Very impressive. So let's see. If we look into our, we have here our expense ratio and our turnover ratio. So I have notes up here that says funds with higher turnover ratios tend to be poorer performers, and funds with high expense ratios tend to be poorer performers. So when we're looking at expense ratio, the lowest one here is going to be for T. Rowe Price Blue Chip Growth. And for turnover ratio, we have a tie for Jackson Square and Matthews Asia. And so this is definitely the highest here for turnover. And it looks like that's the highest for our expense ratio too. So Matthews China, something you might not want to look into. Our managers here, let's look into this. So we have a manager who analyzed Japanese companies before, and looks like they've done it for a while. Qualified, don't know what's happening here. This is an analyst from 2007-2010, has experience, very qualified. So they're just going through it. So let's look a little bit more into these two, our domestic funds. So here I have our risk rating and our asset allocation. So since this is domestic, we see most of our assets in U.S. stocks, a little bit of cash, a little bit of non-U.S. stocks. Here we see that the 3-year return is above average, the 5-year is above average, and the 10-year is high, looking good. The Morningstar risk here would be average, below average, and above average. So 10-year you have a little bit more risk than you would in the 3-year. Looking at the T. Rowe Price Blue Chip, we can see that this is also above average for the 3-year, the return. And we have high and high, and all of the risk here says above average according to Morningstar. And of course, most of the assets are in US stock and a little bit in non-US stock. So looking like we have a little bit more risk in T. Rowe Price Blue Chip Growth rather than Jackson Square. Let's look at the foreign. So here's the risk and rating again. We have high return, average return, and above average return. So it looks like you get more of a payout when you are in it for the long term here. And the risk, you have a lot of risk, it looks like, in the longer term as well. But that's probably why you get such a good return. Looking at Matthews China, returns are high, and we didn't have any data for the 10-year, and the risk is low and below average. So you're not getting much risk here, which is interesting considering their expense ratio and their turnover ratio. So their asset allocation for both of these companies is, of course, mainly in non-US stocks since they are our foreign funds. And we have a little bit in US stock over here for Matthews Asia, a little bit in US stock for Matthews China, and a little chunk of cash. Our sector funds, we have T. Rowe Price Health, and the returns is average for the 3-year, above average for the 5-year, high for the 10-year. It looks like 5 years is a good investment. The risk is only average, so looks like there is more risk with the 10-year. About the same over here. We have above average returns for 3, 5, and average returns for 10. And risk is going to be average, average, and below average. Looks like you have pretty good investment with the 10-year. Asset allocation, mostly in US stock for both these. There's a little bit non-US stock here, a little bit here. Not too bad. Looks like they might have a little cash right there, and they have a little bit of cash too. So looking at them all, I would definitely say Jackson Square is probably one of my favorites, considering they have pretty decent expense and turnover ratios in comparison to the other ones here. This is not the lowest expense ratio, but I think this is like the lowest combination. This one, it's not too bad either. This one, even though looking further into Matthew's China, it, I don't know if I would really be interested in this one just because there is such high. Both of these are just really high. Okay, that's all.